Guys, Nike just reported this is a company that I own, but don't ever buy a company because somebody on the internet has it. This is a very long-term play, like all of my investments, and I'm surprised to see this movement after hours. The reason being, Nike reported 14 cents in earnings, beating the estimate of 12 cents. They reported 11.1 billion in revenue, beating the estimates of 10.7 billion. They're down 0.5% right now. Guys, you got to remember, Nike is still struggling and struggling greatly. If you go look at their financials, you have to look at their income statement. Yes, they beat on estimates, but the same quarter last year, they did $12.6 billion in revenue. So even though they beat the 10.7, they're still down, what is that, 15%, not quite 15%, 12% of revenue year over year. That's a big drop. That's nothing to be scoffed at. So you might sit there and say, well, Paul, why the hell are you looking at this company? Well, because I think Nike is going to be around for a very, very long time. And I think this is a short-term problem that they'll get around. There are issues, there are supply chain issues, there's some demand issues because of China. There's a lot of things going on. But my thesis on companies is I look at them and say, where do I think this company will be in 20 or 30 years? What does the world look like for Nike to be gone in 20 or 30 years? I don't think that's likely to happen. I think they're going to still be around and better than they are today. So the only question remains is, can I pay a reasonable price today for the company? Well, we're going to get into that. But the first thing is, if you care about stock price, this shows you how volatile stock prices can be. November 5th, 2021, they hit a high of almost 180. Just a few months ago, they're at $52 a share, and right now they're at $62 a share. $62 a share. Now, we have 27 members of our community who voted on the stock, and the average rating is a buy rating. 3.7% have a sell, 30% have it as a strong buy. Now, we tend to be like-minded people, but I'd be interested to hear the sell ratings. You know, a lot of people say the brand is dead. I don't think the brand is dead. I think there's a lot of positives in the brand. Are they going through a temporary slow? Yes, I do think that. I know that. You see it in the numbers. But do you think Nike 20 years from now will be around, and do you think their revenue and profit will be higher than it is today? That's the question we have to ask. So all we have to now figure out is, what's the right price? Because you can still make a lot of money on a temporary bad story. That's where we're at with Nike. Now, before we get into their quarterly report, this just came out. Nike sales dropped 12%, but Sneaker Giant says the worst of its slump is behind them. That's a positive. That's a lot of positive there. The company reported net income for the 3-month period ended. Sales dropped to $11.1 billion. In a press release, Nike Finance Chief Matt Friend confirmed the fourth quarter will see the largest financial impact from its turnaround, and headwinds are expected to moderate moving forward. Okay, maybe so. Guys, I don't care about quarterly results. You might be like, Paul, how do you own a company and not care? I care about the long run on this company. I care about where they're going to be because I think that this brand is so powerful. The company is so powerful that they're going to get better. There might be short-term problems, but they're going to get better. If I'm wrong, I think there's a lot of juice for the squeeze there. So if I'm wrong, I'm probably not wrong by much in my opinion. Now, they haven't released their actual quarterly report on their website yet, but they have a conference call set for 5 p.m. Eastern time, 2 p.m. Pacific. Guys, I can't stress this enough. You cannot look at the stock price movements to decide if you're right or wrong. When the stock was at 180 and we said we were interested under 100, people thought we were crazy. Go look at the past videos. Go look at the comments. Nike will never be below 100. Now at $60, those same people are the same people who thought that 180 made them right. So they're going to think 62 means they're wrong. No, it's just the market's decision on that day of what price they're willing to pay. Doesn't mean they're right or wrong. We've seen the fluctuations. Look at NVIDIA. NVIDIA, just since the start of this year, it's a $3 trillion company, fell 35%, increased 65%, all in a matter of 6 months on a $3 trillion company. Do you honestly think that NVIDIA justified if they were selling for fair value, if they were selling for their intrinsic value, do you think the company changed that much in 6 months where the price fell 35% and then rebounded 65? It's all perception. It's all emotion. That's what we're here to teach you. We're investors, not speculators. That's the big thing. In the short run, one of our best tenets of our principle-driven investing is tenet number 4. In the short run, stocks are a voting machine. In the long run, they are a weighing machine. Guys, these principles that I live by, these tenets are a foundation of thinking. It's really important to have that foundation no matter what level of investing, whether beginner or advanced. These are important things to understand. We're investors, not speculators. Every investment is the present value of all the cash flows that it's going to get. If you don't understand it, we don't buy it. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. And the fifth and most important one, a great story can become a bad investment if you pay the wrong price. If you want to get further explanation on these 5 tenets and these 5 foundations, click the link below. We will email it to you in a matter of minutes. And if you like the software back here, go check it out. There's also a link for checking that out. But let's pull up Nike's stock analyzer, where we sit there and put the numbers for the future. Since I talk about the future, let's go on a 20-year return. I'm doing 20-year analysis. I'm doing 3, 5, and 7% revenue growth. Okay? Not huge, not crappy. Profit margin, 9, 10, 11. Same with free cash flow. PE, 19, 22, and 25. Guys, if you told me a higher number, I'd believe it. If you told me a lower, this is the art of investing. This is why we have 3 different estimates for low, middle, and high assumptions, because we want a range of outcomes. And the question becomes, where do we buy? And finally, my 9% return to say, what's the market? What's it worth if it were to sell at the market price? 9 or 10%. If it were to match the market, what's that intrinsic value? Remember, that does not have any margin of safety. You need margin of safety. You need buffer in there because we're humans and we make mistakes and we don't know the future. But this is why I'm interested in Nike. A low price of 50, high price of 120, middle price of 75. I think the juice is worth the squeeze here. And as it goes lower, to buy more of it. That's my opinion. Don't do anything just as I do. Guys, check out our software. Check out the Principle-Driven Investing PDF sent for free to your email. Thank you for your time.